Alright, so today we're going to be looking at basically every single thing in part 1 of economics. So that means everything that we did so far in economics from the time we started university to now, okay? So this is over 60 slides, but I'm going to explain it in such a way that it's simple because we both first years. I think that I can explain it very easily, okay? So the first one we're going to do is economics, okay? Now remember, economics is multiple choice, right? So which means you just need to understand the concept, understand examples. You don't need to memorize word for word. As long as you know what is meant by this, it's fine. You get a picture, that's the best thing. So economics is divided into two parts. It's micro and macro. Now I told you before, micro and macro, those should be the keywords. Micro is something small. So here in this economics you deal with businesses and people. While macroeconomics deals with the economy as a whole, right? So the whole economy. So something that is what, how, for whom are two big economic questions. I have one of them. Now what does this mean? The what is what product are you manufacturing? You have to decide, okay, is there a shortage of this product? Or is now this product getting more modern? Should I have to change what products? Because this what question was different 10 years ago when there was no technology. But now that what is like, okay, maybe now I have to produce more better goods, okay? The how, so how are you going to produce it, right? The land, will you rent a property? Will you buy a property? The labor, will you have skilled labor, unskilled labor? Capital, how much capital must I get a loan or must I use my own money? Entrepreneurship, how must I organize all these three above things and make a business out of it, okay? Now, the next one is for whom. So who are you manufacturing this product for? Are you manufacturing this product to adults? Are you manufacturing it to children? Are you manufacturing it to people who are rich? That means you can make a selling price that is very high. Or are you manufacturing it to a low developed country? So for whom is the product being manufactured for is one of the questions that you need to answer. Now, what is the pursuit of self-interest and social interest? Okay, the keyword is self and social, right? Interest is just the same. Now, to give an example, let's say, for example, right, I like a burger. Now, it doesn't mean the social interest will be everyone likes a burger, okay? If I like something which is self-interest, doesn't mean everyone, all people likes that or have the same interest in it. So same in the economics idea, if I say, okay, I feel like cell phones should be manufactured more than food. Okay, and I will do that in my business. That's fine for self-interest, but social interest, is it something people will want? Is it something that people accept? No. If you think, let's say, let's say manufacture something that is very controversial, right? Let's say some weird example. You go and kill birds and you charge people a fee because you hate birds. Now, in your self-interest, you think that's good. But in social interest, people think that's unethical and that's bad. Okay? So your your business model must be self-interest and social interest. If it benefits you, it must benefit the population as well. Now, what is privatization? So this is where you make public owned companies or businesses privately owned. For example, public companies such as Econ, all these are run by government, right? They're public. But now let's say private owned is, let's say, the government no longer runs it, right? You get a group of people, they run it. So privatization. Now, is privatization a good thing? It could be a good thing for some companies because you all know government cannot run businesses very well. I mean, load shedding also. It could be very good. Okay? Now, globalization. When you think of globalization, think of Connect International, right? Everyone is connected internationally, right? Now, for whom does it globalization benefit? It benefits everyone. But also, is globalization, self-interest versus social interest comes very good over here. Because self-interest will say, okay, globalization is very nice, so let me go to a country that is very poor and put my business there and then make my products there. And then, because the cost to manufacture is very low, because I do not have to pay these people in poor countries very high, I can sell it to expensive countries, modern countries, very expensive. That's your self-interest. But social interest, people will think that's unethical. You're exploiting these people, okay? Same thing happening in China. Okay, so done. Now, second chapter. Okay, what is a trade-off? It's a choice, right? It's same as like an opportunity cost. If you have an apple in one hand, an orange in one hand, if the kid picks the orange, then the apple is a trade-off. That's what he trade off, he left off, okay? Making a rational choice. Now, what is a rational choice? A rational choice is a choice that is good, and it's not stupid. That's basically it, right? So, if you, let's say, you own a business, you have to make rational choices in the business. Do not make stupid, choices, okay? Let's say if you got a manufacturing business and you want to manufacture shoes, do not make a decision to manufacture shoes that are costing about 20,000-40,000 rand, because in South Africa, your business will not succeed, and you'll get robbed, basically, right? So that's not something that's good for South Africa. That's a rational choice. Making choices that are good. Don't be very, very stupid, okay? That's a simple thing, stupid. Benefit is what you gain, okay? And what cost is what you must give up. Okay, so what is the trade-off? What to put, how to spend income, how trade-offs are, okay, from whom. Okay, so trade-off is a choice, okay, what you're letting go. That's simple. So yeah, it just explains, like, if you have more buying power, like, your choices will be more, okay? Let's see. Okay, so opportunity cost. Same thing I told you. You've got an apple in one hand, orange in one hand, the kid picks the orange, the apple is opportunity cost. It's something that you're leaving out. For example, if you study at UKZN, what's your opportunity cost? It could be a job, because now you could have been doing a job and now you're studying, okay? What is the opportunity cost of you studying for an exam? It's your sleep, right? You won't get enough sleep. That's your cost. You're letting go of your sleep, but you're studying. Okay, so one of the most common multiple choice questions they'll ask is, let's say if you got a job that earns 200 rand, and then you basically go for a soccer match that costs you 50 rand. So what is your opportunity cost? If, let's say, you don't attend the match. No, wait. Let me rephrase it. If you got a job that pays 200 rand, and you choose to visit your friend, which will cost you 50 rand, what is your opportunity cost? It will be the cost of the job, which is 200 rand, plus the cost which you went to your friend with 50 rand, so it's 250. So remember that. Okay, so choosing at the margin means just choosing at the best possible, like best place, huh? Okay, so marginal benefit, what's it? It's an increase of an activity, right? The benefits you get. For example, what is the benefit of me eating? What is the marginal benefit? It's me getting full. That's the increased activity I get, or benefit I get, right? What is the marginal benefit of you having more products in your business? That's more sales, right? Because of the increase in units, there's more sales. However, marginal cost, what is the cost associated, right, with this increase in activity? So if you manufacture more products in your business, it's obviously going to cost you more. Your marginal cost will increase, right? So your marginal benefit has to be more than your marginal cost. If you want to do something, you have to compare your marginal benefit and marginal cost. If your marginal benefit is more and the benefits are more than the cost, obviously then you take the marginal benefit, which that choice is perfect for you, right? So if your marginal cost exceeds your marginal benefit, don't take it. If all our odds are against you, do not take it, right? Next chapter. Economics as social science. Okay, that's social is like people. So positive statements can be tested. So what is a statement? It's something that a person says, a sentence, to make it simple, right? For example, I say all rich people contribute good to the economy. That's a positive statement because it can be tested. You can conduct surveys, you can go out and you can see, okay, is that true, okay? Normative statements are opinions. I say, I think all rich people should pay 5% more tax than others. That's normative because it's an opinion. So if you should in your answer, think in your answer. Or if your answer is an opinion, what you think, then that's obviously normative and it can't be tested, right? It's not possible for you not to test it because it's not abstract. How can you test it? You can't. Obstacles in economies, okay, answering cause and effect. So there's a lot of things that affects the economy, okay? Cause and effect. Whatever like comes on the economy and tries to destroy it, it'll have an effect. Or basically what I'm trying to say is, if you go into the economy, there'll be an effect, right? Cause and effect. If you put a business into an economy, there will be an effect. Whether that effect is good, whether it's bad, it depends. Now, what's fallacy of composition, a post hoc fallacy? That's very important. Okay, fallacy and composition, it's basically assuming one thing against a whole group of people, right? That could be wrong. For example, if there's a business, right, and the business got a new manager. Okay, now this manager, let's say he was working for 1 year, and in the second year the business failed. It doesn't mean because when you're getting a new managers in a business, your business will fail, right? You're assuming one thing for the rest. Or they got a good example over here, where a business fires some workers to cut costs and this improves profit. Now, because it's one business does it, it doesn't mean if all businesses fire workers, it'll improve profit. No, that'll bring the whole economy down. So although it worked for one business, do not put it in the picture of every single business. If one person does it, doesn't mean every person does it, it'll work. Doesn't make sense. Post hoc fallacy. The word post should be the keyword. Now, post hoc fallacy means basically if you got two events, A and B. So basically you're saying B happened because of A. So if you got a farm, every time when the sun rises, a rooster crows, right? It doesn't mean the sun rises because the rooster crowed. Like, it doesn't make sense. You can't assume something happened because of something, right? If you get a new owner in the business and suddenly the business failed, it doesn't mean that it's the owner's fault. It may be maybe it was because of the economy, right? The economy went better. Not because, don't assume that, right? So that's post hoc fallacy. Okay, next one is graphs. Now I did a whole separate video on this, graphs, the slides. So if you want to see, just go a little few videos back. I did all this in detail. So yeah, so just go back. I did this all in detail. Okay, now this is very important. Production possibility and opportunity cost. Now the amount of good we produce is limited by resources, technologies, and trade-off, which makes sense, right? Resources, we don't have a lot of money. We don't have a lot of like raw materials, okay? Technology, some people don't have access to advanced technology like rich countries, okay? Trade-offs, we have a lot of choices to make that we have to go off it, you know what I'm saying? If you have two choices, sometimes businesses cannot pick those two choices. If you have a small business and you have an option to do let's say a beverage company, drinks, or food, you cannot pick both, right? People do not have the resources and money to do that. So there's a lot of trade-offs, right? You pick one thing but you must leave the rest alone. Now, what's the PPF? PPF assumptions. Now, PPF is a graph, right? Now, when any graph of PPF is drawn, you assume resources are fixed, or resources are efficiently employed and technology is fixed. So this makes the PPF very accurate, because you have to have like same things for like a PPF to be accurate, right? So you have to assume all these three things in every PPF you make in any country, okay? Because then it'll be accurate. Okay, so PPF frontier is a boundary between those combination of goods and services that can be produced and those cannot be produced. Okay, so so this is extremely important, this whole PPF thing. So I'm gonna make it in the next video. Okay, production. Okay, so I'm gonna do it in the next video and continue.